Yeah, good morning, everyone. US market had seen correction post Fed meeting. It was running higher in during the day, but towards the end of the day on yesterday, the market declined and ended lower. And today morning, even futures are also trading lower. And we are seeing a larger impact on the Asian market, which are down by around 2%. Fed in its meeting has come up with the statements more of in line with what was market expecting. Interest rate increase was expected to start from March, and some of the indications, though they had not said it clearly, but some of the indications were indicating that the interest rate increase can start in March, and that too with 0.25%. And tapering is also likely to get over by March. About the unwinding of balance sheet, they had not given any timeline or any indications when that will start, but that's indicated that that will also start soon, and issue some guidelines for how the unwinding of balance sheet will happen. So overall, the statements were more of the in line with what was expected, and as such, there is no change in the policy rate or anything. But the market is taking it as a negative dampener and is impacting the continuation of its decline earlier, and that is being followed in this post this meeting as well. If you see on the oil is continuously moving up. Means it's again reached to $90 yesterday, and today it is at around $89. 2 days back, it was at around $87. And now post this, even US has said that they will be further releasing oil from their reserve to cool off these increasing prices, and this will be followed even by the other countries like Japan, Korea, and India as well. So, but still oil is remaining at a higher level. Apart from that, aluminum is flat today morning. Copper is up by around 0.4%. Iron ore is flat, and steel is down by around 0.6%. So whatever the mayhem which we are seeing in equity is not getting reflected into the commodity. They are more of a steady. Dollar index has moved up from 96 level to almost around 96.5, and that is having an impact on the emerging market equity. And bond yield has also increased in last 2 days from 1.7574 to so overall sentiment for today seems to be negative. And I'll request technical team to take up from here.
Yeah, good morning, all of you. Last day we see the momentum in market and Nifty trading above the important resistance level. But after Fed event, Nifty again opened a gap down. But first pivot important level for index is 17,000. But if Nifty break that, open that below that level and maintain first half an hour below the 17,000 level, then next important support zone for index is 16,840, 16,700. 16,700 is a 9 month upward trend line support. If Nifty managed to sustain this level, then we expect at that level we can expect bounce back. But if Nifty first half an hour maintain 17,000, then first important support zone for Nifty is 16,840 and 900 at downside. Again, upside immediate resistance for an index is 17,140, and then next important resistance is 17,300 in upside. So we expect before budget in range for index is 17,000, 16,700 at downside, and 17,300 in an upside. So we can watch first half an hour after gap down open. If Nifty managed to sustain 17,000, first 30 minutes. Then we see the sideways momentum, and if second half again Nifty break that level, then we expect further selling pressure towards 16,840 and 16,700 at downside. To we watch this closely, this important level below 16,700. If Nifty before budget break that level, then we see further selling pressure towards 16,400 and 16,500 downside. To expect Nifty trading within the range for before budget, and upside in 16 17 300 is the next important level for index. If Nifty break that upside level, then we expect further momentum in market. Bank Nifty also trading importance range, is trading the 100 DMA. Important support place around 37,000 at downside. If Bank Nifty also come this level and manage to sustain this level, then we see some sideways momentum. But if we break that level, first half an hour trading below this level, the next important support for 36,550 and 36,000 at downside. Upside important resistance place around 38,100 and 38 and above level. Do we expect today market in gap up, gap down open, and important trading in pivot level. If break that all the pivot level, and Bank Nifty is 37,000 and Nifty is 17,000, then we expect further pressure for market. But in downside is important support zone is placed at both index. So we expect Nifty two trading session is maybe today or tomorrow. Nifty may be bottom out at downside. Do we expect bounce back at that level? Nifty Finance also trading near the support zone, and we expect Nifty Finance next important support is 17,500 and 17,400. Below 17,400, next important support is 17,300. Upside 17,630 is the first resistance for Nifty. Nifty Finance. That's Nifty Finance. So in stock specific, Tech Mahindra Infosys looks weak at current level. Cipla looks positive at current level, around above 900. Maybe see the 930, 940 in upside. Support place around 888 at downside. Infosys looks weak below 1520, and next important resistance is 1540. Downside, 1740 is the next important resistance for Infosys. Downside 1670, 1640 is the next supports zone for Infosys. Do we expect negative in Infosys and Tech Mahindra also? Cipla in positive side. That's it for technical derivative. I think.
Yeah, thank you, Vikas. See, on Friday, on Tuesday, I clearly said, that there can be bounce, but that can be short-lived. And, that is what exactly is happening. We did see a bounce from 17,000 levels, just like we had seen a couple of days bounce from 17,500 levels. Now we are opening gap down. We will open near the 17,000 levels, but probably below it. The data is still negative. The VIX continues to go, stay above the 20 levels. It is at 21 odd levels. The open interest has come down again. The PCR saw a bounce back because of the bounce. So all in all, there is negativity. Now today is the expiry day, and during these expiry days, generally you see the index clinging on to the psychological levels. So 17,000 is a good support area. Probably will open below and maybe stay below for some time, but eventually I believe 17,000 level is somewhere, you will see the expiry near the 17,000 or 16,900 odd levels. However, if 16900 levels is broken, the next real support and the strong support is at 16500, which we think should be retested during the course of the next 2-3 days. But with the markets becoming negative, you are seeing the highest put base being shifted every day. So it was at 18,000, then 17,500, then 17,000. Now 16,500 has the highest open interest built up. So that is the next real support area for Nifty. And if you see, Nifty has moved up from 16,500 odd levels in the last swing. So that was the swing low for Nifty, and very likely that can be retested going forward, and that is where probably some form of base can be made. But at this point of time, we believe 16,500 will be retested. So that is for Nifty. From the stock specific front, um, as Vikas said, IT sector looks negative. There are a host of important resistance supports which have been broken for the IT stocks, for Infosys, Tech Mahindra, TCS, and midcap IT as well. So they are likely to see some sort of selling pressure coming in. From the other sectors, the only real sector which seems to be witnessing some amount of buying is the pharma sector, and that to some select stocks only. So no real buying momentum or consistent buying or open interest built up seen in other sectors. Oil and gas space, ONGC looks good. It continues to witness good open interest built up and is likely to move up further, but other stocks might witness some selling. So one should remain in a sell on rise kind of a scenario. We've given a sell call on Infosys and Tata Motors in the previous trading session. So they can probably hit the target. So if they open around the cost, you can go short. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. HG Infra has been declared L1 bidder by NHAI for a highway EPC order worth 1100 crores. So that is positive. PNC Infratech has received an order worth 2300 crores. It's in a JV, but in the JV 90% is held by PNC. So this is a good news. Our 2300 crore order from the UP government under the Namami Gange and Rural Water Supply Scheme. So positive for PNC. Federal Bank result was marginally above expectation. Credit cost and slippage both were lower than expectation. The slippages were at 1.3%, even below that of HDFC Bank. But that has been the case since quite some time. However, the loan growth remains muted at 12%. Despite the bank not having any asset quality issues, it has not been able to accelerate the loan growth. So 2 points where the bank is lacking behind is loan growth and as well as NIMs. So until it takes positive steps in these two departments, don't expect any meaningful re-rating. But however, stock is looking attractive, and with overall economy improving, one can expect a bank also to re-rate. Canfin Homes result was in line. Loan growth reached 19.5% YOY from just 7% 2 quarters back. So revival in real estate has helped the company, and also despite the RBI circular on asset classification, the gross NPA have declined from 0.8% to 0.7%. So expect performance to continue going forward as well. Stock is trading at 2.2 times FY23 book value, which we expect should go to 3 times going forward. So we are positive on Canfin. ICRA result has improved. Revenue was up 12% year on year, but it is led by outsourced services, which grew by 31%. However, the largest segment, which is ratings, grew by just 4%. So growth is lagging behind in the rating segment for quite some time. EBITDA margins expanded, and that was the reason that EBITDA grew 43% year on year, and that was because of lower employee and other expenses. So they have managed to control their costs, but inherent growth on the rating side remains to be low. So we are neutral on ICRA. Thank you.
Good morning, everyone. JV Chemicals has announced an acquisition of brands from Senzimi, a leading player in probiotic segment, for a transaction value of 628 crores. The acquisition would foray the JBCL's entry into this highly uh, fast-growing probiotic and therapeutic nutraceuticals. As per IQVI, the December revenue was 160 crore. So overall positive for JB Chemicals to give them new segment to grow for. In the results, Torrent Pharma came out with the results, and results were below expectations. In fact, the commentary was also negative in the con call which the company conducted on the day end. Because of the lack of new product approvals from US, as their facilities are still under warning letter from the US FDA, which is impacting the overall growth, as the US sales has came down to $31 million, which is one of the lowest in the Torrent history. And they have also seen the higher than expected pricing erosion in that. Though the on the profitability, the company is saying there were some one-offs and there some specific reasons. They expect kind of 3% impact to normalize in coming quarters, especially from Q1 FY23. But we are not very positive on this and continue to maintain a negative stance on this. The share is trading at 33 times. Cipla came out with the results, and results were above expectations. The main positive surprise was the US revenue, where it came at $150 million against the expectation of 145. Also, the outlook remains positive, given that the near-term launches with the company has lined up. So, and the margins were also higher than expectation. So, overall, at 21.8 times FY23 EPS, we are positive on this. United Spirits came out with the results. Though the volume was little lower than the expectations, the overall results were above the expectations. The sales grew by 16%, and margins were also came at 17% versus expectation of 15.4. The con call is scheduled today, and there would be more details about this. SRF came out with the results, and results were above expectations. Again, though the sales grew by 56% YOY, margins were in line with the street expectation. Again, the call is scheduled today, and we would get to know more details about it. Pidilite announced the results, and results were below expectations, mainly because of the margins, which came at 19% versus 21% expectation, and last year it was 28%. And with share trading at 81 times FY23, there is no scope for uh, error here, as the share is already very expensive. Today, Adani Wilmar IPO is also opening up, and the price band is 218 to 230, and it would be open till 31st Jan. This is mainly into edible oils, and sell the stock and sell the oils under the brand name of Fortune. Uh, the company is one of the leading player in this and control have around 17% market share. However, coming to the financials, it is growing at a CAGR of 13% on top line, but the EBITDA has grown just 8% during FY19 to FY21. Though for going forward, the company is positive to improve their margins, given that they are foray into and bullish on the food segment. They sell various grocery under the Fortune, like the basin, wheat, and all. However, we believe that that only contributes around 10% of the total revenue, and for them to become a sizable portion of the overall pie of the company's revenues and to make the changes in the EBITDA margins would take some more time. Because of the low margins, even the ROE and all are very low. And edible oil per se is a matured market, so we don't see much growth in that. And at the price when it is coming at, the valuations it is demanding is very expensive as compared to Marico, which sells which is one of the leading player in that, and the Agrotech Foods, which sells the Sun Drops brand. So that is why we are recommending avoid on this issue. Thank you.
Good morning, everyone. MPS has provided with its result yesterday. The company has posted okay set of numbers for the quarter with revenue coming in at 112 crore and EBITDA margins coming in at 29%. Stock is trading at 16.4 times TTM EPS. TeamLease has provided in line with expectation set of numbers both on the revenue and the margin front. Stock is trading at 37.2 times FY23 EPS. Thank you.
So Maruti result was above estimate. EBITDA margin improved 250 basis points quarter on quarter. So after 4 consecutive quarters, we have seen improvement in margins now. This is because of multiple price hikes company has taken and also lower sales promotion spends and cost saving efforts in this quarter. Further, steel prices also remain soft now, which leaves scope for gross margin expansion in coming quarters as well. Passenger vehicle industry is expected to witness a cyclical upturn over next 2 years. And also in the near term, the chip shortage situation is constantly improving. So company said that Q4 will be better than Q3. Retail market share of the company has slipped from 49% in FY21 to 43% in current year on weaker SUV presence and as well as chip shortages. So we expect that the company will plug this gap on the SUV side and will introduce 3 to 4 new SUV products across price points over next couple of years. So that should help them regain the market share and grow faster than industry in couple of years. We see this as a positive and company should do well going forward. Although on valuation front it looks to be fully priced, but we still feel that earnings upcycle will catch pace and that could lead to upgrades in the stock. So we are positive. Thank you.
Yeah, apart from this, Finolex Industries announced the results and the results were below expectations. The revenue came at declined by around 7% Q1Q and 6% year on year. And EBITDA margin has also come declined from previous years and previous quarters, though flattish on expected line. The key concern is volume decline. Pipe and fitting volume has declined by around 15% year on year. Whereas it has declined more than expectations, but still better than Supreme Industry. Supreme Industry volume declined by 25.5%. So though it is better than Supreme Industry, but overall below expectations. Then Indiabull Real Estate has come up with the numbers and the numbers are declining. The new booking has come off very sharply, and whereas the other all real estate company had shown very good growth in the new bookings, whereas for Indiabull Real Estate, the new booking came at around 184 crores versus Q1Q 524 and year on year 990 crores. This decline may be because of changing management and lack of new project launch, which in the portfolio of Indiabull Real Estate, and that's why the company has reported lower booking. Profitability also had seen a lot of impact, and company has reported larger loss of around 87 crores. But generally, the losses, the results are not to be seen much because they comes with a lot of lag and depend on the completion of projects for real estate companies. The key thing to watch is new booking, and that has come lower. Even company has sold few subsidiary, and in that turn sold some land also and realized around 580 crore from that. But in this process, the net surplus value which company disclosed for all their project together has come down from 30,000 crore to 10,000 crore. So that will also act as negative for the company. So stock is likely to remain under pressure in today's trade. Then Macrotech developer also has announced the result, and the key thing to watch in that is again pre-sales and pre-sales figures they had announced earlier only. So nothing so great now to report is that only profitability has improved quarter on quarter and year on year, But the key figure is Macrotech developer. The figure has already come way back. So nothing new now in the results. Apparently, it indicate that the result is improving. Then Kirloskar Ferrous management has come up with uh, indication that the pressure in the margin in the current quarter will continue even in the next quarter, and there will be lower volume on account of blast furnace repair. So again, coming period is likely to remain under pressures, and the stock can remain sideways or may see some correction also. Then Apollo, APL Apollo Tube has come up with out, so near-term outlook remain more of a neutral, but long-term APL Apollo outlook is positive. They are likely to maintain EBITDA per ton or may come off marginally from Q2 levels, and volumes are likely to improve going forward. So overall, near-term may remain soft, but long-term outlook continue to remain positive for. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.